Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, December 6th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES in the daily time frame. This is after the jobs number comes out. NFP report out a little earlier, 227,000 jobs versus a 202,000 estimate. Also an upward revision for last month to 36,000 jobs from 12K. And the initial reaction was a bump to the upside. Now still a fairly narrow range heading into the RTH Open. Right now we have 24.75 points of range. We can drop this back down to 1 day right here. 24 points of range, 52% of ADR. Still a narrow range despite the entire day's range being pretty much a reaction to NFP. You had the quick drop to the low, you had the pop to the upside, and right now we're pulling back just a little bit. So the day's range right now is the impulse move. If we pull back to the day's midpoint of 60.33.38, that'll get that's the wrong day. If we pull back to the 60.88.38 midpoint, that'll give us an intraday key range to work off of. And we could be looking at a 2-day compression here with an upward bias still. This market continues to melt up, especially into the Thanksgiving holiday and coming out of it. Still kind of a melt up phase, very low volatility. But after weakness, we've been seeing this market continue to kind of work higher after pullbacks. We've only had one down day, 2 down days, I guess, with yesterday within this up move, and failed new lows have continued to provide an opportunity to be in. You had a failed low here for a push higher, and today you're seeing a modest failed low as well. So right now, uptrending market melting up and still working higher overall. At some point here, we may see a counter trend pullback given the uptrending structure here, where we may be at a cycle high within this uptrend. Maybe there's a bit of a pullback that happens and then a strong finish into the end of the year. But we'll see. Right now it just seems very, very low volatility at this time. So we could be looking at fading the edges with an upward bias based off of the impulse move created by NFP. If we take a look here at the NQ, very similar price action in the NQ. This one pushed downward to begin with and then rallied post NFP, and that gave us a key range there. The midpoint here for today is 21,477 and a little bit lower, and we'll get that midpoint and get ourselves a new intraday key range as well. Kind of stuck in a 2-day compression right now, still upward trending overall. And again, lower volatility playing out right now. We have an uptrend where we're sitting kind of near the upper end of that trend. So again, kind of a cycle high right now for this market, where we could see some sort of pullback followed by maybe an end of year run to the upside. So kind of, again, low volatility price action, 2-day compression developing after recent strength, and we could continue to see a melt up phase here up ahead. Looking at crude oil, this one's down about 1% right now. 67.56 current last price. 67, even 67, right around that zone has been big time support. Now we haven't gotten quite that low just yet. Today's low 67.38. So just off the lows of the day right now. Clear downtrend here. We've seen this market really just kind of compress between two extremes here. You have 67s on the low, you have 73 on the high, and 70 right in the middle, and it's kind of been between those extremes. We have had some kind of compression here toward the back end of this range, but this market really hasn't wanted to see much in the way of weakness below 67. 67s have been big time support here recently. You can see it across the chart. The previous quarter's low will put you close to 65, and then you have major market structure support, multi-year support at 64. So as I've mentioned before, if we were to get down into this zone, that could provide a tremendous buying opportunity for a late year rally and a first of the year rally that takes us into March, which takes us perhaps back to 78.50 up above, maybe even higher by the time March comes around. So any drop here over the next week could be a buying opportunity for a last of the year rally. And again, does it happen at 67 here where big time support has been seen? Do we get a little bit below that area? We'll see what happens here, but any drop coming up here could be a buying opportunity for a late year rally and a rally into March of 2025. Looking at gold futures right now, this one's up 0.3% right now. This one has developed a very clear compression here over the course of the last 8 sessions now. 8 developing sessions. We can put this up to 8 days right here and quantify that. 8 days here, 60 points of range, 45% of average range. So that 8-day compression right there is quantified down here. And you're looking at a move that could take you toward the 159 point expansion target. That's 125% extension. The average range would be about 127 points as of right now. So you're looking at about 130 to 150 points easy on the next breakout move. Now we've been stuck at the center of this range here for quite some time. This is the previous month's midpoint right there, and we've been stuck there. That is also the previous quarter's close. And so we had just been hugging that flat line for quite a while. And we started the quarter doing that, rallied away from it, came back to it, took it offer, dropped away from it, came back to it, and we've been stuck there ever since. So this compression right now, building tremendous energy. Anytime you close a month near the month's midpoint, there's a tendency to make a quick move to one of the extremes, either the upside previous high or the downside previous low. So at some point here we could break loose from this range and find that expansion target somewhere between 130 and 150 points of range. Right now still in compression mode at the moment. Looking at the YM here, the YM in a compression mode as well. This one has also developed an 8-day narrow range. You can see here it's 37% of average range, just 644 points of range. That's a clear compression here that could build some energy for the next move. It's in line with some of the compressions we've seen over the last several months as well. After strength, you can see this channeling behavior, and now compression at the highs at a cycle high. So that could lead to a bit of a pullback as well, and maybe a continuation into the end of the year. So we'll see how this manifests itself later on out of this range. At the moment, we're looking at the potential for 2,000 points of range here. 2,000 points of range could be seen out of this compression here, and as little as, say, 1,600 points. So 1,600 to 2,000 points of range could be seen out of this range. We are coming into the back half pretty soon of December, and that tends to be a low volatility portion of the year, but not all years are equal. So we'll see how the market response out of this range, but a ton of energy being built up in this range, very similar to gold as well. Looking at Bitcoin here, Bitcoin with a big push up to 105,000 in the previous session, auctioned lower after hitting that level. Is this a strong high? Is this a rejection high that's going to lead to major selling pressure, or was that just kind of a modest profit taking opportunity? The trend that we're in is still very bullish, and what we mentioned in the trading room yesterday was that this looked very similar to something like back here, where you did develop a tail event there, but it wasn't necessarily a rejection event that led to weakness. Instead, a couple of days later we pushed through the midpoint and found new highs. That could be very similar to how it plays out this time around, as well, as this market continues to see quite a bit of strength and growth. Now, if this does lead to an impulse sell-off, then it will give us likely a new key range to work with, and that key range could give us some great longer term targets down the road to work with. So that's going to be something to keep an eye on. But right now, still very strong overall, still working its way up. Can it finish through the previous midpoint of 101,968 over the course of the next 1 to 3 days? If so, it'll likely negate that rejection tail and eat through it for new highs up ahead. So still showing quite a bit of strength right now, but if we did fall away from that tail high, then it could lead to an impulse sell-off. Say it comes back to 85,000, it bounces back to 95,000, you get yourself a new 20,000 point key range, and from that 20,000 point key range, we'd be pointing at 125,000 as the next major upside target. So either way, we could be looking at more strength down the road. Looking at Ethereum here, this one's up 1.68% right now, and this one has hit our second target. So back here at around 2,400, we mentioned that the next push through 28 opens up 34 very quickly, and then shortly after we hit 4,000. And we got 4,000 yesterday. A great move. Again, a 1,600 point move from 2,400, which is just a tremendous rally and a huge percentage move. But we've now run into massive resistance here. 4,000 has been significant resistance all year. Is it going to respond in the same way as it has over the last couple of rotations? Each of the last couple of times it has rotated back to 2,800 from 4,000. Do we need to come back through the market structure, or can this thing bust through 4,000 and open up the next highest market structure level above? The next highest market structure level will be 4,600. 4,600 will be the next key level above, based off the 600 point market structure distributions. Maybe there's a pullback to 3,600 or 3,400, and then we can see a launch to 4,600. So we'll see how it behaves here, but right now showing a little bit of backing off the 4,000 level, right where it has backed off earlier this year. If it can push through 4,000, it's going to open up 4,600 down the road. All right, that is it for now. We'll see how this plays out here heading into the rest of the week. Again, have a fantastic Friday. Have a great weekend. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.